Taking a live look at the White House, President Trump today announcing sweeping new tariffs on what he has dubbed Liberation Day. He started with at least 10% tariffs across all countries. The rates will be higher for countries he deems the worst offenders.
Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. But now it's our turn to prosper.
The universal 10% rate will go into effect on April 5th. The customized rates will take effect on April 9th. The president is adamant this will reinvigorate American manufacturing by incentivizing companies to increase production in the U.S. Economists are predicting prices will go up for the average consumer. The administration has acknowledged there will be an adjustment period. Speaking of that, stocks taking a hit in the after-hours trading on the news of President Trump's tariffs. NASDAQ saw an immediate slide, dropping 4%. The SPY, which tracks the S&P 500, is down 3%. The S&P has been down for the last month on fears of an aggressive tariff regime. The Dow has dropped around 800 points. One investment bank estimated a universal tariff this large could lead to a 10% contraction in the stock market.
Well, we want to break down the economic impacts of the new tariffs here in Oregon, so we want to bring in state economist Carl Riccadonna. Thank you so much for joining us tonight.
Good evening.
Okay, let's start with your reaction to the tariffs announced today.
Well, it certainly is a very sizable impact. We should think of a tariff as a tax. There's an open debate who pays that tax necessarily. Sometimes consumers, sometimes businesses, sometimes it's distributed further up the supply chain. Nonetheless, this is a very massive impact on the global economy and certainly on the U.S. economy as well.
You joined us back in February when President Trump first floated tariffs on Mexico, Canada, and China. So have you seen any changes unfolding here in Oregon in the weeks leading up to today's announcement?
Well, I think we have seen stress in the manufacturing sector. We haven't seen a big price impact just yet from the tariffs that were put into effect previously. But I think that given the magnitude of what we've seen announced earlier today, there will be a price impact. Tariffs have kind of a very lopsided impact on the economy, where you have the price impact very early on. That's followed by some depressing impact on economic activity shortly thereafter. And then for the much anticipated job gains and onshoring of activity that the president discussed, that will take a much longer time. It certainly takes a long time to build factories and reorient supply chains. That's something we should be looking for, but it will be something that happens later on this year or later on in his administration. I will say there are maybe, while this is a negative development for the economy more broadly, there are some silver linings I think we should be cognizant of as we parse through today's news. One, the tariffs, I would argue, are not as bad as what the administration was threatening. Initially, they were saying full reciprocal tariffs, and the president billed this as the nice version of retaliation, where they described these as discounted reciprocal tariffs. So they were basically half as bad as what was previously being threatened. The other things we should consider is that this may very well be the high watermark for tariffs. So a big problem is the economic uncertainty around the tariffs. Now we know what's in play here, and so maybe we'll see some of that uncertainty diminish going forward. And then finally, I think we should also be closely tracking something that maybe slipped in the details here is the de minimis exemption. So that's packages of $800 or less in value that were exempt previously, and there were potentially some strains happening with retailers here in the state competing with these kind of fast fashion and very discounted retailers overseas, and maybe closing that loophole will potentially have an impact on Oregon retailers who have been shedding jobs pretty consistently for the last 6 to 12 months.
Let's go more on to how it affects Oregon. What impacts do you predict that we will see here in the Northwest?
Well, already we've seen just earlier this week a surge in purchases of motor vehicles nationally as people are trying to get ahead of those tariffs. And I think we're seeing that in some other categories as well. There's been a big rush to get product in place before the tariffs kick in. And so we see this in container traffic. We see this in inventories and retailers and wholesalers, in manufacturers. And so you're seeing this kind of ramp up in activity before the tariffs hit, which will then only exacerbate the hangover in just a month or two. So we will be watching for stresses in the related industries, goods-related industries like construction, manufacturing, those types of sectors, to see how quickly this translates into potential increases in unemployment and whatnot. What I will say to this point, despite all of the headlines we've heard out of Washington, D.C., related to tariffs or federal cutbacks or whatnot, there's been some surprising resilience in the labor market, both nationally and also in the state of Oregon, where we've seen not a big spike in unemployment that some were fearing would come to pass. And there's some signs of stress, but not nearly as bad as I think we had feared just a couple of months ago. Now, this is a very dynamic situation, so we'll watch to see how this evolves. But to this point, I think that the worst fears have not come to pass. That being said, these are significant economic headwinds.
State economist Carl Riccadonna, thank you so much for your time tonight.
My pleasure.